Welcome back. You're watching Your World at 10 now. The Authority for Advanced Rulings, or the AAR as it's commonly known, has ruled in favor of E-Trade Mauritius, exempting E-Trade from capital gains tax in the IL&FS stake sale deal. The tax department had claimed that E-Trade Mauritius was in fact a shell company, and the IL&FS stake was actually belonging to E-Trade's parent company in the US. Hence, E-Trade was liable to pay capital gains tax, but the AAR has now ruled otherwise. Does this clear the tax ambiguity over foreign investments coming in via the Mauritius route? Well, joining us to discuss that, Dinesh Kanabar, Deputy CEO at KPMG, and tax advocate Porus Kaka. Dinesh, Porus, thank you very much for joining us. Dinesh, how far-reaching is this decision from the AAR? What are the implications? Because the tax department had tried to prove that the E-Trade Mauritius company that sold the shares to HSBC was in fact a shell company, having sourced the funding to buy those shares originally from its US parent, and therefore that the shares belong to the US parent, and since the US parent is not covered under the Mauritius Treaty, it does not benefit from no capital gains.
So to answer your question, Menka, at one level this is a decision which is of not much consequence, because it only relates to, as you know, the AAR decisions are only in respect of the person who has sought the ruling,
right,
and not in respect of everybody else. It has no binding value elsewhere. But at another level, I think it's a very, very landmark ruling. It has got widespread ramifications. We had thought that we had heard the last of the Mauritius controversy after we heard the Supreme Court in the case of Azadi Bachao Andol, when they said that the circular issued by the CBDT, that once you have a tax residence certificate, you are entitled to benefits of the tax treaty, was something which was gospel thereafter. And here was Tax Office once again raking up that controversy. What the Supreme Court had held in the case of Azadi Bachao Andolan is that the circular would not be binding insofar as one could prove that the management of a company which was claiming to be resident of Mauritius was actually in India. However, if it was in a third country, then that argument could not be taken, because the question was, is it as between India and Mauritius, and not whether it is in a third country at all.
Right.
And in fact, very interestingly, that was the affidavit which was exactly filed by the revenue authorities before the Supreme Court of India, that was their stated position. And yet we had this controversy being raked up once again. Will this ruling kill the controversy? I do not know, because the tax office can go on raising this very same controversy again and again and again. But the question is that we have a law of the land. That law of the land seemed to be unsettled at a point of time because of the position which was taken by the tax authorities. And now the AR has reaffirmed that position. So to the extent it's a very, very welcome ruling. I think it will provide a great deal of certainty to all investors, specifically FIIs and others, where this issue keeps on coming up day in, day out.
All right. Porus, I understand that we're all discussing this without much detail on the exact wording of the decision by the AR, because the ruling is yet to be out in full detail. But what do you make of the implications of this judgment?
Well, I think one of the important things that we need to look out for in this judgment is the concept of beneficial owner qua capital gains. That's an issue which arises in significant amount of our treaties with India, and also outside our treaties under Section 9, for example, in the Vodafone decision. We have to see if the AR has at all touched upon this, or has stuck to the Mauritius Treaty and the circular. Because undoubtedly, I think the clearest statement of beneficial owner qua capital gains comes from the Supreme Court, read with the Mauritius Treaty and the circular. So if you want to put a hierarchy of treaties, I think Mauritius is way above, because you have the sanctity of a Supreme Court judgment which is required to be followed by all the courts. When you go to other treaties, when you go to outside the treaties to Section 9, I think the department is definitely going to try and ensure, or at least try and make an attempt, that this judgment doesn't affect them. Otherwise, I think this would be an important judgment going forward, and I think it recognizes the principle that the Supreme Court laid down, which is when you have a treaty country between two, you can't merely as one treaty partner say that I wish to ignore a resident that is incorporated under the other treaty, which the other treaty partner recognizes as a resident of his country.
All right, both of you have caveated your answers. Porus, how much of this confusion will continue to prevail, and what will put an end to the confusion about the Mauritius route and whether companies located out of Mauritius can actually avail of treaty benefits or not? Or are we going to continuously have the tax department try and poke holes, saying, so what if you have a tax residency certificate? It's actually the parent company that financed the purchase of shares, as the case they've made in this decision, and therefore you will. So this whole form versus substance bit or beneficial ownership bit that you brought up, how prevalent is it, and how much more of a problem is it going to be over the course of the next many months?
Well, I don't want to give arguments to the tax department on your channel, but certainly one of the facts that come out of the E-Trade decision is, I don't know whether there is any issue of controlling interest, which is certainly there as a matter of issue in Vodafone, because E-Trade held 43% and not 100% of the subsidiary. Secondly, as I said, you go outside Mauritius, you go to another treaty country, you don't have the circular, you don't have that thing. You certainly have the principles laid down by Azadi. So certainly these are issues which the government and the revenue will tweak at. I think if I was honestly in the revenue's position and they have a grievance where a substantial asset is transferred without any capital gains, I think rather than play around with the existing law, which I still believe doesn't support them conclusively, they must make it clear by either an amendment in the Act which will apply to non-treaty situations and go for amendments in the treaties so that they can, if they feel that the substantial asset or the capital gains is in India, tax that. But without that, to continuously go after whether it's an FII or it's a company which is in Mauritius or other companies situated on the world, I think they are undoubtedly trying to create a precedent for which there is no precedent in international law. We don't look through companies, we don't look through parent-subsidiary relationships, and therefore this kind of attempts are probably going to not be successful until they come up with substantial amendments in the law itself.
All right. In Vodafone as well, they've tried to pierce the corporate veil. Now, this has no bearing on Vodafone, I understand that. But what will it take for us to clear up the confusion that hangs over this Mauritius route? Will it be a much-awaited decision on the renegotiation of the Indo-Mauritius Treaty?
No, Menka, I would look at it slightly differently. A Supreme Court judgment is a law of the land. When Supreme Court of India in Azadi Bachao said that developing economies like India resort to or even permit treaty shopping because that's overall beneficial for the economy. Now, you can't have anything better than that. And when you have, as I said, the tax office itself filing an affidavit to say that once one of the treaty partner claims a residency, who are we to look into it? Right. You would believe that's the end of the matter. So we apparently have a dichotomy between the policy makers at the one level and the policy implementers on the other. Sure. So that's where the controversy needs to get clear today. But more important, if you look at the new direct taxes code, when it comes in, it has got two provisions. First is three provisions, in fact. First is it wants to do away with capital gains tax altogether, and there's a great deal of uproar. I don't agree with the proposition that the DTC is trying to table there. Second is a provision for a treaty override under domestic later law. And third and more important, the general anti-avoidance regulations. So probably, as Porus mentioned, the only way one can really overcome something like that is to look at general anti-avoidance regulations and nothing else. But until that happens, until the law is what it is today, it is actually painful to say that on the one hand there is a policy, there is a Supreme Court judgment, and there are people who are implementing it, sort of acting contrary to it. That doesn't work.
So what should FIIs draw in terms of conclusion from this AAR ruling?
I would actually say that so far as the FIIs or anybody else is concerned who's concerned with the taxability of capital gains, right, the one issue which comes up is there's a Supreme Court judgment, and that Supreme Court judgment continues to be valid.
Which has been reaffirmed by the AAR in this judgment.
Absolutely. It would be interesting to see whether, given the fact that probably the tax office is not being successful in this attempt, will they really reopen the controversy with regard to business income versus capital gains, but that's a separate set of section altogether. The issue really is, what is the message that we want to give the international investors? Are we going to say that the policymakers can say whatever they want to do, but those who are implementing it will try and collect revenues come what may?
Porus, what do you think is the conclusion that foreign institutional investors, or even FDI, anyone who uses the Mauritius route to come invest in India, can draw from the reiteration, that this AAR ruling has, saying that you are allowed treaty benefits if you have a tax residency certificate, and in this case you have a tax residency certificate, therefore you don't have to pay capital gains tax in this country?
Well, two things. This judgment reaffirms the principle that you cannot look through a company qua the beneficial ownership principle for capital gains tax. So it will be a reassurance for FIIs on various investment issues. But I think also I wouldn't be so harsh on the tax department, because undoubtedly they have some grievance. The law currently does not support them to vent that grievance. And as I said earlier, I think if they want that grievance to be vented in tax, they need to make amendments to the law, which perhaps, as Dinesh pointed out, they may do in the treaty. But this judgment reaffirms the principle that treaties will be respected and residential statuses in the other countries will be respected, and you will not be simply allowed to see through on this concept of so-called ultimate beneficial owner or provider of the funds or any other principle that you have in mind.
And are there dozens of other such cases that will benefit from this AAR ruling? Not directly, because I understand the ruling is only specific to one case, but the benefit from the reassurance that this ruling hands out.
Well, as long as the ruling stands, it certainly is only binding qua e-trade, but it will have a persuasive value that will be there, and undoubtedly it throws out a reassurance to all those who have currently used the Mauritius route based on the current government policies.
Last word, Mr. Kanabar, dozens of cases that could benefit from the reassurance?
Yes, there are, and only two comments I would like to make is that I'm told that, where nobody has seen the ruling, but I'm told there are two observations in the ruling. One is an observation warning the tax office not to fiddle around with matters so long as there is a Supreme Court judgment. And second is a comment.
But that's pretty big, isn't it? If that actually bears out once we read the ruling tomorrow,
that's right.
That is pretty strong.
Yeah, but I believe there is something to that effect. How strong is it? I really do not know.
I understand.
And the other is an observation by the authority to say as to whether, given the current economic scenario, India should really actively go on encouraging treaty shopping, and whether there is a need to relook at the India-Mauritius treaty. One would want to look at these two observations as to what is the AR trying to say here.
All right, we have enough reading material for tomorrow then when the ruling comes out. Gentlemen, thank you very much for coming here for, in a sense, a blind discussion. I know we're waiting for more details in that ruling, but thank you for your first comments on this. Mr. Kanabar, Porus, thank you very much for joining us. With that, we need to take a quick break. On Your World at 10, we're going to come back.